Hi all, good morning. I am Abhishek and I am taking you through another important session. Through these sessions, what we are trying to understand are different nuances of finance that impact business. So let's just start. You are the inquisitive student who now wants to understand gross profit, and this is Abhishek Sinha taking you through the concept. So let's start with the first aspect of this concept of gross profit. The first thing that I need to understand is what is revenue. Now, to explain this, what I am assuming is I am Abhishek Aluwala. That is, I am Abhishek Aluwala who sells potatoes. So, this whole story will be about Abhishek Aluwala. So, let's start like this. The number of units of potatoes sold along with price at which it sells gives me revenue. So revenue is necessarily a product of number of units of potato into the price at which it is sold. So the more I sell, the more revenue I earn. The higher the price, the more revenue I earn. So this is the first thing I need to understand. My revenue basically depends on number of units of potatoes sold and the price at which it is sold. So higher the number of units sold and higher price at which it is sold gives you higher revenue. Let's continue. The next concept that I need to understand here is cost of goods sold. So cost of goods sold necessarily consists of three parts. The first part is opening stock, then its purchase, and then its closing stock. So let's just start and understand each of them. Now, if I'm a businessman and I believe my business is continuous, that is, it's a going concern, I will always have some, uh, let's say, raw material that I'm selling, or let's say I'm a potato wala, so I'll be selling potatoes. So I will have some potatoes which I've not been able to sell in the last period. That is known as opening stock. And I would have purchased some potatoes that I want to sell this year. So let's say I had 20 units of potato last year which I couldn't sell. 20 units can be 20 kgs. So that is my opening stock. 30 kgs of potato that I purchased this year is my purchase, and then you have number of units that you have not sold this year, that is your closing stock. So opening stock, purchase and closing stock, these are the three things that make our second character, which is cost of goods sold. We already know the first character, which is revenue, and as I've already told you, revenue has two components. One is selling price and one is number of units sold. Here there are three components: opening stock, purchase, closing stock. Let's understand each of the components clearly. So to understand that, what we need to understand is what we are doing is finding out what have I sold this year in terms of cost. Okay, so I know what is the revenue I have made. Now to find my profit, I need to know the cost. To know the cost, what we generally do is we find out how many potatoes I had, how many potatoes I purchased, and how many remain. So if I had 10 units, I purchased 20 units, I should have had 30 units, right? But I have uh, 10 units left. What does it mean? It means I have sold the difference. For example, 10 units plus 20 units would be 30 units. If only 20 units are left, means 30 minus 20 is what I have sold. So I'll again give you another example. I have 20 kg of potatoes. I buy 30 kg of potatoes this year. So total that I have in the year is 50 kg. But when I'm calculating at the end of the year how many kgs of potato I have, I realize I have only 30 kgs left. So what has happened to the 20 kg? The 20 kg has basically been sold. And let's say if the price of each kg was 1 rupee, then what is the cost of the goods sold? So cost of goods sold would then be opening stock, that is 30 plus 20 minus the 20. So I hope you are getting it. Opening stock plus purchase minus closing stock will give you cost of goods sold. Now, this is how you can understand it better in your mind. Potatoes that I could not sell last year is my opening stock. Now, when I'm saying potatoes, it is in terms of the price of the potatoes. Please remember, it's into price into number of units. Because I'm a businessman, I will maintain it in price. What price is this? Is the price that I have paid or the cost. So basically, for you to understand here is potatoes that I could not sell last year is the cost of potatoes that I could not sell. Then I have potatoes that I bought this year. If I total both of them, this is what I should have had at the end. But I don't have that. I have something less. Why do I have less? Because I have sold particular uh, of my inventory. So opening stock plus purchase minus closing stock gives you cost of goods sold. Simple way to understand is if I'm a potato wala, potatoes that I could not sell last year plus potatoes I bought this year minus potatoes I could not sell this year, or my closing stock at the end of the year, how much potatoes I have. So this is what I mean as cost of goods sold. Now I have the two components. The first component was revenue, the next component is cost of goods sold. So gross profit can be calculated now very simply as the difference between revenue minus cost of goods sold is equal to cost of profit. Now, as a businessman or as a student of business, what do you need to understand in this equation, even if you don't like maths? What you need to understand here is revenue is positive, cost of goods sold is negative, and gross profit, the difference between revenue minus cost of goods sold is uh, positive. So gross profit is basically a function of revenue minus cost of goods sold. So I hope you understand what is gross profit. A gross profit is the first level of profit that we earn. And here I am just taking the raw material cost and I've subtracted it from my revenue. In this business that I'm doing, Potato Wala, I only have my raw materials. They come in and they go. I'm a trader. I'm not changing the form of my potatoes. As the potatoes come, I sell them in the same form. So this was the simplest example to explain the concept of gross profit. Gross profit is simply revenue minus cost of goods sold. Cost of goods sold is calculated as opening stock at purchase less closing stock. I hope you understand this concept. And you also understand that when your revenue increases, your gross profit increases. When your cost of goods sold decreases, your gross profit again increases. With this, I end the session. I hope it was useful.